All right, so right now we're looking at some of these portfolios. This one is beta and return. And as we see here, we have NRP, DLR, Valero, L Brands, Paychex, AT&T, Cisco, Sun Life Financial. So none of the companies that we're currently in, we can clearly see why. You know, companies like Valero. We talked a little bit about NRP, Paychex, AT&T, Cisco to a lesser extent. We understand why this portfolio is performing well, because some of these companies have done really well over the past year or so. Let's keep going down the list and see what else we can find. Beta and Alpha, pretty much the same thing. Looks like Thomson Reuters, Toronto Dominion are both in this portfolio, and so that's Beta Alpha. What else we got here? Up, down, standard. Now, Return Alpha is going to be a pure, like high flying. This company performs the best as far as when the market is up, it just returns the biggest money. And that's the reason why OMI has been doing so well, but for whatever reason has not been on one of the best portfolios. And I understand why, because this thing is just a high flyer, right? So what that means is when the market is down, this thing doesn't do so well, right? But when the market is up, it does really well. So again, we see Toronto Dominion in this one. So that means that it has a propensity to fly really high. And so far, I like the prospects of that one. Let's keep going here. Turn down, turn standard deviation, alpha up, alpha down, deviation. You know, some of the up moves is something I would typically look at, but when we were going through all the different portfolios that performed the best, that was just not one of them. All right, these are going to be all the third. Let me go back to our chart here and just take another look and make sure that I'm looking at the right one. So this was the best, right? The down moves. Here we go. So Beta Return and Beta Alpha. And we already looked at where's my betas? Beta standard, beta down, beta up. All right, let's just make sure here. So yeah, so beta alpha, we got the TD and Thomson Reuters, and we're also looking at the beta return. Just double checking myself here. Beta return, and yeah, and this one didn't have any of our current stocks. I do think that Cisco is interesting though. I have not replaced that technology stock yet, and it's something that we may want to do. But it looks like right now, and I'll dig into this a little deeper, that we're probably going to want to go with Toronto Dominion, which is going to be difficult for me to do, being as how I don't believe, yeah, see, we don't have a buy signal for Toronto Dominion. However, we do have a buy signal for Thomson Reuters, and we actually are missing about 30 shares to come into balance. So that's about $1,600. difference to balance out for Thomson Reuters. GE, like I said, is the hardest hit. So what I'll do is I'll look again to see what the chances are of this thing bouncing back anytime soon before we dive in and buy more shares. I'm also going to take a look at Cisco as a possible replacement for Seagate. Let's take a look really quickly at Cisco here. So Cisco, yeah, very close second. Has performed very well over the past year. As far as the comparison between the two, of course, the dividend for Cisco is going to be much lower. Looks like the beta is better though. Seagate's alpha is better. And looks like Cisco is better when the market is down. Seagate is better when the market is up. No, wait. So, yeah, Seagate is better when there's a lot of activity inside the market. That's what's going on. It's inside the stock, rather. So, yeah. Uh-oh. I was looking at the wrong one. Hold on. Let's go back and do this again. I need to freeze these frames over here. Not gonna be able to have it. I'm gonna be able to have it my way. See here, price, dividend. Okay, so that's the beta, which is much better. The alpha, which is much better. Then that's the up moves, and that's the down moves. So Seagate performs better when there's a lot of activity inside the stock, but overall though, it looks like for the market itself, not only do I think Cisco stands a better chance in its current market, but our portfolio seems to think so as well. Looking at our beta and alpha, and let's see the beta return. Yeah, Cisco again. So I think that's what we're going to do. We're going to replace Seagate with Cisco, and then we will look at purchasing either more GE or more Thomson Reuters. Okay.